Global Monetary Watch, August 22, 2026. Something unusual is drawing attention across Iraq's financial landscape, but it is not centered on a single dramatic announcement. Instead, the discussion is increasingly focused on a series of banking, payments, market, and regulatory developments that have unfolded over recent weeks. For people following the Iraqi dinar, these developments can be difficult to interpret because they involve different parts of the financial system rather than one confirmed currency decision. Today, we are going to examine those developments carefully, separate reported facts from interpretation, and explain what they may tell us about the direction of Iraq's banking system without treating speculation as confirmation. One development receiving attention is the expansion of modern digital payment services inside Iraq. The Credit Bank of Iraq has been reported as launching Apple Pay, an important development for the country's digital banking environment. A service such as Apple Pay requires participating financial institutions, payment networks, security procedures, and compliance systems to work together. Its arrival therefore reflects progress in the ability of Iraqi banking institutions to interact with international payment technology. However, it is important to make one distinction immediately. The introduction of a digital payment platform does not itself establish that the Iraqi dinar is about to be revalued. It is better understood as one part of the broader modernization of Iraq's financial infrastructure. Another area attracting attention is the performance of the Iraq Stock Exchange during the first half of 2026. According to the figures cited in the original report, trading activity reached approximately $290 million during that period, while the market recorded a return of 16.52%. Those numbers are relevant because the stock exchange provides a window into investor activity surrounding Iraqi companies and financial assets. At the same time, stock market performance should not automatically be interpreted as evidence of an upcoming currency rate decision. Equity markets respond to many factors, including company performance, economic expectations, liquidity, policy developments, and investor sentiment. Therefore, the ISX figures are significant market information, but they do not independently confirm an IQD revaluation. The report also points toward Iraq's foreign currency and reserve position. Parliamentary figures cited in the transcript place Iraq's official reserves at roughly $10.9 trillion, Iraq described as approximately $83 billion US. Elsewhere, the report references an earlier figure of around 130 trillion dinars and a subsequent decline. Because reserve figures can differ depending on the accounting date, valuation method, and category of assets being discussed, they should be interpreted carefully. Foreign exchange reserves are important because central banks use them to support monetary and financial stability. However, the existence of substantial reserves does not automatically mean that a government has decided to change its currency regime or establish a particular future exchange rate. That distinction becomes especially important when discussing the Central Bank of Iraq. The transcript describes the CBI as having opened an exchange rate review process. If confirmed through official documentation, a formal review would certainly deserve attention because exchange rate policy is one of the most consequential areas of central bank decision-making. But a review should not be confused with a completed decision. Central banks routinely study monetary conditions, exchange rate pressures, inflation, reserves, market liquidity, and other economic indicators. Until an official institution announces a specific change, the current exchange rate framework remains the relevant reference point. Another event discussed in the report concerns the physical delivery of U.S. currency to Iraq. The transcript states that approximately $500 million in physical cash was shipped to the Central Bank of Iraq during August. The stated purpose was connected with travelers and remittance requirements. Physical dollar shipments can attract attention because cash management is an important component of Iraq's foreign exchange system. Nevertheless, such a shipment should not automatically be interpreted as evidence of a coming dinar revaluation. Currency demand, cash distribution, international transactions, and remittance requirements can all create legitimate reasons for physical dollar deliveries. The key question is therefore what official documentation says about the purpose and broader monetary context. The relationship between Iraq's official exchange rate and its parallel market rate is another major part of the discussion. The transcript cites a parallel market figure from August 17 of approximately 54,500 Iraqi dinars for 100 Iraqi dinars for $1, compared with roughly 131,000 dinars using the official rate. If those figures accurately represent the respective markets and dates, they illustrate a substantial difference between official and street pricing. Such gaps can create economic challenges because they influence expectations, currency demand, import costs, and incentives within the foreign exchange market. However, a parallel market premium does not guarantee that authorities will respond by changing the official exchange rate. Governments can instead use regulatory, monetary, banking, or market management measures to address the imbalance. This difference between official and parallel pricing is important because it affects how people perceive the value of the dinar in everyday transactions. When unofficial markets price foreign currency significantly differently from official channels, analysts naturally begin asking why the gap exists and whether it can remain sustainable. Several factors can contribute to such differences, including restrictions on access to foreign currency, demand for dollars, banking procedures, market confidence, and expectations about future policy. Consequently, the existence of a gap is a genuine economic signal, but interpreting its ultimate meaning requires more evidence than simply observing the numerical difference between two exchange rates. The transcript also discusses a legal development involving Iraq's Federal Supreme Court and the government's authority concerning currency restructuring. The report presents the ruling as potentially reducing procedural obstacles associated with redenomination. This subject requires particularly careful terminology because redenomination and revaluation are fundamentally different concepts. Redenomination generally involves changing the numerical units in which a currency is expressed, such as removing zeros, without necessarily increasing the currency's underlying purchasing power. Revaluation, by contrast, involves changing the exchange value of the currency against another currency or currency basket. A legal decision concerning one process should not automatically be treated as authorization for the other. That distinction is especially important for anyone following online discussions about the Iraqi dinar. Currency restructuring can take several forms, and removing zeros from banknotes does not automatically turn existing holdings into dramatically greater purchasing power. Likewise, a change in an exchange rate policy would involve a separate economic and monetary decision. The report therefore raises an interesting legal issue, but it should not be used as evidence that a specific exchange rate has already been selected. Without an official announcement identifying the exact policy, date, and mechanism, claims about a predetermined rate remain speculation rather than established information. Another theme running through the current discussion is the reintegration of Iraqi banks into international financial networks. The transcript refers to 7 Iraqi banks being restored to correspondent banking relationships and reconnecting with international systems, including SWIFT-related services and dollar clearing arrangements. If verified, improvements in correspondent banking would be important because international banking relationships support cross-border payments, trade, remittance, and financial communication. Yet international banking access should again be viewed within its proper context. Restoring or strengthening correspondent relationships represents progress in financial connectivity and compliance. It does not, by itself, constitute confirmation of an Iraqi dinar rate change. This broader banking modernization is perhaps the most meaningful part of the story. Iraq has been working to improve financial compliance, electronic payments, banking transparency, and connections with international institutions. These changes can make it easier for Iraqi banks to participate in global financial activity and can improve the infrastructure required for modern commerce. The significance lies less in any single announcement and more in the cumulative development of the financial system. A stronger banking sector can support businesses, facilitate payments, improve transparency, and reduce dependence on informal financial channels. Those are structural developments, regardless of what ultimately happens to the dinar's exchange rate policy. The arrival of international payment technology also fits into that larger picture. When Iraqi financial institutions adopt systems used by consumers and businesses around the world, they demonstrate increasing integration with modern payment standardization. With digital payments can reduce reliance on physical cash, improve transaction convenience, and create additional channels for financial activity. But again, there is no reason to automatically connect every digital payment development to an imminent exchange rate announcement. Banking modernization and currency valuation are related components of an economy, but they are not identical processes. One can advance without the other, and responsible reporting requires keeping those distinctions clear. The Iraq Stock Exchange provides another useful perspective. Increased market participation can indicate that investors see opportunities in Iraqi companies or expect improvements in the country's economic environment. A rising market does not necessarily mean investors are positioning for a currency revaluation. Investors in equities are purchasing ownership interests in businesses, and their decisions can be based on earnings, dividends, sector growth, economic reforms, or expectations surrounding domestic demand. Therefore, the reported 16.52% return is worth monitoring as a market statistic, but it should not be presented as proof that institutional investors know an upcoming dinar rate. The reserve situation deserves the same careful treatment. Central bank reserves provide an important buffer for managing external payments and supporting confidence in the monetary system. Iraq's reserves are influenced by oil revenues, government spending, foreign exchange demand, imports, monetary operations, and other factors. A decline in reserves does not necessarily mean that a central bank is preparing for a currency adjustment. It can reflect ordinary foreign exchange operations or changes in government and private sector demand for dollars. Conversely, substantial reserves do not guarantee that authorities will maintain the same policy indefinitely. The correct conclusion is that reserves are an important indicator that must be examined alongside many other economic variables. The parallel market situation is similarly complex. A wide difference between official and unofficial exchange rates can create pressure on economic policy, particularly when businesses and consumers have difficulty accessing foreign currency through formal channels. Authorities may respond by improving banking procedures, strengthening compliance, increasing access through authorized institutions, controlling illicit currency activity, or adjusting monetary policies. There is no universal rule saying that a government must respond with an official devaluation or revaluation. The eventual policy depends on the country's economic objectives, inflation conditions, reserves, fiscal position, trade requirements, and broader financial strategy. The comparison with Kuwait, mentioned in the original report, also needs careful handling. Kuwait's experience following the Gulf War is sometimes used in online discussions as an example of currency normalization after a major disruption. However, Iraq today is operating under a completely different economic, political, institutional, and monetary environment. Historical comparisons can help explain how financial systems evolve, but they cannot establish that two countries will follow the same sequence or produce the same currency outcome. A previous country's experience should therefore be treated as historical context rather than a forecast for Iraq. What emerges from all of these developments is a picture of financial system modernization rather than a confirmed currency event. Digital payments are expanding. Iraqi financial institutions are working towards stronger international connectivity. Market activity has attracted attention. Reserve levels remain an important subject of discussion. The relationship between official and parallel exchange rates continues to be monitored. Legal and regulatory developments are influencing discussions about possible currency restructuring. Each of these developments deserves examination on its own terms. When they are viewed together, they demonstrate that Iraq's financial system is undergoing meaningful changes, but they still do not provide an official confirmation of a specific future dinar rate. For Iraqi dinar followers, this distinction is crucial because online discussions often combine verified developments with assumptions about what those developments might eventually produce. A bank launching a payment service is a documented banking event. A stock exchange gaining value is a market event. A reserve figure reported by officials is an economic statistic. A legal ruling is a legal development. A rumored exchange rate, however, belongs to a different category unless it is officially announced. Keeping these categories separate makes it easier to understand what is actually happening and prevents speculation from being mistaken for confirmation. At this point, there is still no officially confirmed future IQD exchange rate contained in the developments discussed here. There is also no confirmed public date establishing that the dinar will suddenly move to a particular value. Any specific figures circulating through online communities should therefore be treated as unverified unless they come directly from the appropriate Iraqi monetary authority. This is especially important because exchange rate policy can have significant consequences for prices, trade, government finances, banking operations, and ordinary household. Responsible analysis must acknowledge those complexities rather than reducing the issue to a single dramatic number. The most reasonable way to interpret the current situation is to watch the underlying infrastructure. Pay attention to official Central Bank of Iraq communications, changes in foreign exchange procedures, banking sector reforms, international correspondent relationships, reserve statistics, payment system expansion, and developments in the official and parallel markets. These indicators provide more useful information than unsupported claims about secret rates. If an actual exchange rate decision occurs, it should eventually become visible through formal policy communication and observable changes in the financial system. Until then, the distinction between preparation, reform, and confirmed monetary action remains essential. So, what does all of this mean as of August 22, 2026? It means Iraq's financial system is clearly a subject of significant change and scrutiny. The developments discussed in this report show activity across digital payments, banking connectivity, capital markets, foreign exchange management, reserves, and legal frameworks. They may help explain why interest in the Iraqi dinar remains high, but they do not independently establish that a revaluation has already occurred or that a particular rate has been approved. The story is therefore less about a leaked number and more about understanding the structural changes taking place inside Iraq's financial system. And that is the part of this story worth watching most closely. Financial reform rarely depends on one isolated event. It develops through banking procedures, regulatory decisions, payment infrastructure, market conditions, international relationships, and monetary policy. Some of those developments can happen quietly and receive little attention outside specialist circles. Others eventually become visible through official announcements. For now, the evidence discussed today points toward continued financial system development and ongoing debate about Iraq's exchange rate framework. What happens next will depend on decisions made by Iraq's monetary and governmental institutions, not on rumors circulating through online communities. Global Monetary Watch will continue to separate documented developments from interpretation as this story evolves. The Iraqi dinar remains a subject of intense public interest, but understanding the facts requires patience and careful attention to official information. There is no confirmed rate being presented here, no guaranteed outcome, and no prediction about what authorities will decide next. What we can examine are the developments that are already visible: banking modernization, digital payment adoption, international financial connectivity, reserve movements, exchange rate differences, and regulatory changes. Those facts provide a much stronger foundation for understanding Iraq's financial landscape than speculation alone. If you are following this story, the most important question is not simply whether a dramatic rate announcement is coming. The more useful question is what measurable changes are occurring inside Iraq's financial system and what official institutions are actually communicating. That approach keeps the discussion grounded in evidence. As new information becomes available, developments should be evaluated according to their source, context, and economic significance. For now, the banking and financial reforms discussed today remain important developments in their own right, while any future change to the Iraqi dinar's exchange rate policy remains a matter for official confirmation.